What's up, everybody? Welcome back to the channel. I am here in Las Vegas, Nevada, and Cathie Wood has just gone on CNBC. She did a little bit of an interview, and we're going to react to it. This 4 minutes we're about to react to is the main part of the interview that I thought was incredibly important about inflation, interest rates, what's going to happen in the next 6 months. She makes an interesting prediction about what's going to happen and about the potential for growth stocks to actually rally from this level with the Fed being easier than they have been or less hawkish than they have been over the past couple months. So let's get right into it. Let's see what Cathie said. We're going to analyze it as she speaks and see if there's any logic to what she is saying.
I want to get your sense of where we are in this economic cycle, if we could. And really, I think, given the conversation we've been having all morning, has inflation peaked?
Yes, well, it's very interesting to hear people saying that we'll be able to skirt recession. We believe we are in a recession. The durable goods orders we just saw, really we're seeing the strength there because of activity being attracted to the U.S., a flight to safety. That's why our dollar's been going up as well. Nonetheless, we think we are in a recession. We're seeing tremendous demand destruction. You see demand for gasoline over the summer down to 25-year lows, 1997. Think about that. So lots of demand destruction, and we believe it will continue. The good news here is to hear Michael Evans this morning talking about, hey, we're all on the same page. This could be done in the first 3 months of next year. Well, if the market is the discounting mechanism that it should be, then it should be discounting the peak in interest rates. Yes, inflation peaked. We believe core inflation peaked at 5.3%. This is the PCE deflator that the Fed supposedly pays the most attention to. 5.3 in February. It's down to 4.6.
So one of the first points she's making is that the core inflation level metric that, again, the Fed says they look at, but it seems like they're more obsessed with the CPI, which is the consumer inflation index, is that if it's going down from 5.3 to 4.6 and it's going down in the core, then that means inflation has legitimately peaked. Now, in the CPI, it went from 9.1 to 8.3. Which is not the best decrease, but core has gone down. So her argument is if this core is going down, the Fed does not need to be as hawkish. CPI made them feel as if they do need to be more hawkish in terms of talking about getting a recession, getting rid of jobs, all this type of stuff. But her argument is inflation has legitimately peaked. She's also going to talk about commodities going down, which means there's simply no reason for the Fed to be as hawkish as they are.
And with all of the price declines that we are seeing out there, whether it's in retail because of too much inventory or way up the pipeline with commodities really falling out of bed, all of them, we think the inflation rate is going to be surprisingly low. We would not be surprised to see deflation month to month sequentially for a number of months during the next 6 months.
This was the most interesting part of the interview to me because Cathie Wood obviously was wrong on the transitory thing, right? She was just dead wrong on it. She has admitted it. And so she's taking a big bet, and it's clear in terms of the stocks that she's doubling down on that there could be a level of deflation. And obviously she has her whole thesis about exponential technologies, costs cutting in half, and that causing, more deflation happen, along with the technicals about commodities actually peaking, or inflation peaking and commodity prices going down. So all of that mixed together leads to deflation. But the fact that she's saying over the next 6 months, month over month sequentially, meaning January, February, March, we might see a level of deflation in the economy where the Fed now has to do QE or the Fed has to pump some type of stimulus. I mean, it would be just phenomenal to see that happen given all the pain we're going through right now. And the fact that she's head on that thesis, either she's going to be right or she's going to be wrong. So in the next 6 months, I mean, we're going to know what happens.
Does that mean that you are betting that the Fed eases up in a way that they have not signaled thus far?
Absolutely. I think they do not appreciate how much demand destruction has taken place out there. But this holiday season, I think, will be telltale that way. And so I do think we're looking at a major pivot. If we're right that deflation, and we've been saying this for a while, so consider the source, but if we're right that deflation, both for cyclical reasons and for secular reasons, all we do is look at technology and the cost declines associated with different technologies, and they're massive. So we think that inflation during the years ahead is going to surprise significantly on the low side of expectations.
And then how do you think that the Fed balances both the issue of credibility, given what they have signaled about the market, with the data that you're suggesting they're not appreciating just yet?
Well, I think they have been basing their outlook and their policy on two lagging indicators. Seems they've been paying more attention to the CPI year over year, which is still at over 8%, and employment. Both of those are lagging indicators. The leading indicators, which are all in the pipeline, easy to see right now, are all saying that prices are going to come down. Inflation certainly will come down, but I think the big surprise out there is the number of months we will see actual deflation, negative prices. And it's not just because of the U.S. In fact, we're benefiting from the flight to safety from the rest of the world. What's going on in China is highly deflationary. What's going on in Europe, the same. This energy is a huge tax on that continent. One of the other things that's happened in the last in the last week that I think is fascinating is that both Japan and China have basically supported their currency, and they're basically saying no mas. And in order to do that, what are they doing? They're selling dollars and buying their own currency. So effectively, China and Japan are doing some of the easing that we think the Fed will do, increasing dollars in the system.
That was an interesting point at the end as well. This concept that that geopolitically, given what's going on in the currency markets and Japan and China selling their dollars to be able to increase the level of their own currencies, also doing some of the deflationary work for us because it's lowering the value of the dollar. So at the end of the day, Cathie Wood has made like a pretty strong thesis now. She's had this thesis since January. I mean, she's been saying, hey, these exponential technologies are going to risk deflation since January. Obviously, she mistimed that because January was just the beginning of a lot of the inflation from all of the liquidity we pumped into the markets in 2020 and 2021 beginning to show its ugly face. But at this point, I do think she has an argument around deflation having the potential to come because of inflation peaking. Now, the exponential technologies and AI, all that stuff. So, for example, a stock that I like that she likes as well called Ginkgo Bioworks, their cost to be able to do genomic sequencing has decreased 50% year over year for like the past couple years. So they have done like millions of genomic gene sequence editing of pieces of DNA in the last year, and they did like a 10,000 over the past like 8 years. So like it's just absolutely, those are exponential levels of growth. The question is, do they meet the market and from a business perspective? So there's a lot of things that go into cost decline leading to this exponential level of technology that's going to deflate all these different levels of the economy. I don't buy into that thesis for the next year, definitely not the next 6 months. I think that's kind of ridiculous assuming that would happen in 6 months, but inflation peaking and core inflation going down, I think she has a point there. I think if inflation does come down, the Fed is going to be like, all right, 75, we don't need to do another, we're probably getting another 75, but after that, we go to a 50. And if we don't get another 75, then that's really bullish for the market. I looked at a couple of other analysts today on CNBC saying that this is a great opportunity to buy, that this is the time that, you know, you want to get in and start initiating your positions in 2023. So we're going to see. We're going to see if she's right. I mean, she has doubled down on Roku, Zoom, Tesla, her main bets that obviously get really affected by interest rates going up because tech valuations get slammed. It's also why Elon Musk is on Twitter every day saying, hey, let's not raise interest rates. But ultimately, the Fed is going to have to make the decision. We're going to see what happens. So thank you guys for listening. Thank you guys for watching. We are going to see how this all plays out. Leave your comments below on what you think about Cathie Wood, if she's right and if she's wrong. And I'll see you in the next one.